But yeah, my name is Michael Berger, and I want to present about the topic of aiSure and performance guarantees for artificial intelligence and cybersecurity. Many AI companies, including many AI cybersecurity companies, face the challenge of needing to build trust with potential users about the predictive performance of their AI. The potential users might ask themselves whether the AI will truly and consistently perform as expected, and if the AI is making more than expected mistakes, are they the party who is basically picking up the costs? I advocate that AI providers can use the instrument of performance guarantees to put those doubts of the users to rest, and thereby also further the adoption of robust AI. But before I dive deep into the content of my presentation, I want to briefly introduce my company and my team. I'm heading a business unit at Munich RE called aiSure AI. Munich RE is a global insurance and reinsurance company. In fact, it is one of the biggest cyber reinsurers in the world. I'm based in Palo Alto in the Bay Area, and my team structures risk transfer solutions for risks associated with artificial intelligence, including predictive performance risks and discrimination risks. In my presentation, I argue that AI providers can use performance guarantees to overcome the challenge of trust and thereby further the adoption of robust AI. I will make my argument in three parts. First, I will quickly highlight the potential and also then the challenge that I see when it comes to AI in cybersecurity. Afterwards, I will introduce the instrument of performance guarantees as a way to overcome this challenge. And then in the final part of my presentation, I will put all those theoretical concepts that I outlined into practice, and I will highlight one case when AI cybersecurity company used the instrument of performance guarantees to further the adoption of their AI solution. But now to start into AI in cybersecurity. You heard about this case already in many other presentations. Here, I want to start out by basically just looking into a simplified cybersecurity value chain. So here I basically noted down simplified cybersecurity actions a company can take from the time perspective of when an attack occurs. Starting on the very left, that's the time prior to an attack occurring. A company can use cybersecurity tools to assess cyber exposure, as well as then use tools to propose mitigation measures in order to reduce cyber exposure under budget constraints. Then when the attack occurs, that's the middle box, we can use cybersecurity tools for detecting attacks and ideally automatically preventing them. After an attack occurred, and in case the attack was successful, we can use cybersecurity tools for attack remediation and as part of incident response services. Now, of course, the question is, what kind of cybersecurity tools should we use? And that's a very difficult question, simply because the cyber exposure and the cyber threat landscape are changing. So legacy systems that we used in cybersecurity might not be fit for purpose anymore now or also in the future. And why is the cyber threat landscape changing? I think a big contributor here is simply the trend of digitalization of businesses. New vulnerabilities increase proportionally with the speed and the scale of technology adoption. And we also see new business models which emerge, which might be fully virtual, for example, in the blockchain and the cryptocurrency space. In addition, for traditional companies who are adopting or needing to deal with Internet of Things or industrial Internet of Things, also their cyber exposure changes and new cyber threats emerge for them. The last example I mentioned here on the slide is the changing working culture, and especially also the trend from working from home, which also creates new exposures on the cyber side for traditional companies. And there we might require new solutions which are capable to deal with this dynamic nature of cyber exposure. And I think also in the previous presentation, we heard the case for AI in cybersecurity. So I don't want to repeat the arguments here. The only argument I want to bring up is let's say technical data science argument. It's the argument of high-dimensional feature spaces. So I think that in many problem areas in cybersecurity, we might have a lot of different inputs available, a lot of different features available. This is what in data science we call a high-dimensional feature space. We know that human intuition fails in high-dimensional feature spaces, and so do, of course, models which are built based on human intuition. In these spaces, more complex statistical models trained on data can basically perform much better. So I think this is also another argument for the case of AI in cybersecurity. And of course, this is an argument we're not just making theoretically. We're also seeing in the market already that many companies are developing cyber security products based on AI. And we see that the competition is growing in this sector. This, of course, also poses a challenge for clients, because clients will need to ask themselves what is the best solution for their protection. And especially when we're looking at more complex statistical models. When I'm talking about AI, I'm really talking about statistical self-learning models there. And then those, especially more complex ones, might be black box models. So it might not be easy for a client to truly understand whether this AI might consistently perform well and then really have trust in this new service and new technology. This creates a challenge for the adoption of AI in cybersecurity. But this is not just a challenge of AI in cybersecurity. It's indeed a challenge for AI in general. Here, cite the study from Accenture. Accenture interviewed decision makers at companies, and basically they found that 78% of the interviewed decision makers say that they expect AI to disrupt the industry in the next 10 years. So clearly, those group of decision makers attributes a huge potential to AI. At the same time, 88% of the same group of decision makers basically responded that they do not have confidence in AI-based predictions and outputs. So this seems to be a paradox. On the one hand, we clearly attribute a lot of potential to AI. On the other hand, we are not fully sure whether the AI will truly and consistently perform well. And this creates this challenge of trust, as I called it here, for the adoption of AI. So how can we overcome this challenge of trust, especially when we are looking at robust AI models, which should be worthwhile to be deployed? So what can we do there? We observe in the market that some AI cybersecurity providers are using the instrument of insurance-backed performance guarantees to try to tackle this challenge of trust. So how do insurance-backed performance guarantees for AI work? Well, here I sketched a simple relationship. We have an AI provider, basically providing an AI solution towards a customer as the AI user. We heard in the previous presentation, the AI user might use the predictions either as a decision support or for automating certain actions within the company. And in turn, the customer is basically paying usually an annual subscription fee or some other form of compensation to the AI provider. There's an underlying service level agreement which governs this relationship. Now, the issue is that the underlying service level agreement usually discards any kind of liability when it comes to the predictive performance of the AI. The customer might have the option to terminate the service contract with the AI provider, but in case the AI made wrong predictions, the customer relied on those predictions and took certain actions with financial consequences, then the customer faces losses here. So this means that the customer is essentially bearing the risk of the predictive performance of the AI. And this creates uncertainty, and this creates a challenge for the adoption of AI. So how can we overcome this challenge? Well, one idea is simply to say, okay, let's open up a certain part of the liability under the service level agreement via a performance guarantee. Performance guarantee is a contractual promise that the AI provider is giving towards the AI user, saying that the AI's performance will be as promised consistently, and in case more than expected errors occur, then we will basically cover the financial costs for that. So by providing such a performance guarantee, this risk of the AI not performing is transferred from the AI user to the AI provider. And basically this then creates more certainty for the customer and lowers the hurdles for adoption of AI. Now, we have the problem that the AI provider is basically stuck with this risk. And the AI provider might be the best party to deal with this risk, but the performance guarantees essentially create conditional liabilities. So in order to have the performance guarantees not just as a promise on paper, but truly as an enforceable promise from the customer perspective, we need some source of capital to finance that. As the AI provider is usually a service company and runs a capital lean balance sheet, we might need to have access to other forms of capital. We can look into traditional forms of capital like equity, like debt. However, those are actual forms of capital. They might be quite costly when we are dealing with a conditional situation, with conditional liabilities which arise from performance guarantees. So we should look into basically another form of instrument, which is also contingent in nature. And insurance is basically a contingent cash flow instrument. So we basically can match the contingent nature of the payouts on the performance guarantees with the contingent nature of the capital provision. And by basically having this matching here, we can basically fully fund the performance guarantees and transform them from a promise on paper to an actual enforceable promise. So this is how insurance-backed performance guarantees can work. Now, what does it mean to guarantee performance when it comes to AI and cybersecurity? Let's take a look at the case of attack detection and attack prevention via AI. So clearly here performance means to prevent attacks. I think that's pretty clear. So part of the performance guarantee should read that the AI will prevent all ransomware, costly malware, phishing, credential stuffing, or other forms of attacks through the protected devices. In case there nevertheless a successful attack occurs, a certain financial compensation should be paid to make the user whole for the erroneous predictions. This is pretty easy to achieve. We can achieve full attack prevention. We basically just label all traffic as malicious. Very simple. We prevented all attacks. Of course, that's not efficient. I think that's the second part. Basically, we are willing to sacrifice some positives, some false alarms, by achieving a high level of attack prevention. However, if the level of attack prevention we desire comes with extremely high false alarms, then the solution is inefficient and very costly to implement. So the second part of the performance should be about the efficiency. So for example, reading that no more than X% of false alarms should be created. And then in case more false alarms are created, more burden is put on the user's operations, then the financial costs for that should be taken up, for example, additional IT costs. So I think both forms, efficiency guarantee and attack prevention guarantee, really together form this promise that the AI is performing well in the cybersecurity setting. Now, what are the benefits of this instrument of the insurance-backed performance guarantees, and how can this then use to overcome this challenge of trust? Let's first look into the relationship between AI cybersecurity provider and AI user. From the perspective of the AI user, basically procuring an AI cybersecurity system means to make an investment into cybersecurity with the expected return being to reduce the expected losses from a cyber attack, either by reducing the frequency of successful attacks or by basically reducing the potential costs which occur in case an attack was successful. So when an AI user then procures an AI system with a performance guarantee, then it basically means that the AI user will receive a secured minimum return on the investment in cybersecurity. So how does it work? Either the user will receive an operationally well-functioning AI system, and in this case basically reduces the frequency of successful attacks and therefore the expected losses. Or in case the AI makes mistakes, the financial payout under the performance guarantee will cover those additional costs. Either way, from a user perspective, there's a secured minimum return on investment for this cybersecurity investment there. Now comes also this instrument of insurance. I already outlined it. It has this contingent cash flow nature to it. So from an AI cybersecurity vendor's perspective, it's basically a capital facility to draw upon to finance the performance guarantees. But it has an additional effect. the additional effect is that another party, a third party, basically is backing the performance guarantee. It's basically covering the cost, the payout under the performance guarantee, based on an assessment of the AI's predictive performance. So the nature of giving such a backing itself is basically a signal of quality and trust. And this signal of quality can then also be used by AI users as a decision support tool to decide what AI solutions might be robust or not. So I made now a theoretical case about the challenge that I observe when it comes to AI and cybersecurity, and how I believe that performance guarantees can be used to overcome this challenge. Now let's look into a practical example. And here I took the example of Deep Instinct. Deep Instinct is a cybersecurity company, and it's a partner of Munich RE. Deep Instinct is using deep learning models to perform malware detection and prevention. In particular, the prevention of ransomware attacks. The challenge that Deep Instinct faces is that although they have a robust AI system, potential users are asking the question, what happens if the AI is not performing as well as expected in preventing attacks? And what happens if the AI might prevent attacks but causes too much false alarms? And this is a hurdle for the adoption of the Deep Instinct system. So in order to try to reduce this hurdle, Deep Instinct worked together with Munich RE to structure performance guarantees, efficiency guarantees, and attack prevention guarantees. But then bundling both forms of guarantees, the hurdles of adoption from the user side were lowered, and therefore also Deep Instinct could win additional clients and basically further the adoption of their AI system. So to summarize, I believe that AI faces this challenge of trust. Although we attribute a lot of potential to it, I believe that the instrument of performance guarantees can be helpful for AI providers with robust AI systems to support the adoption of their AI in the market, in cybersecurity, but also in many other cases where we might see the rise of AI systems. Thank you very much for your attention. And I'm open for any questions, and otherwise I wish you a nice lunch.
Qualified AI programs being robust enough to be able to be guaranteed. Inherently, the algorithms will make mistakes.
Yes, this is true.
So it could actually create a condition where it provides some false assurances of societal trust in algorithms that may not actually healthy for the technology going forward.
So I would say, first of all, when we are backing an AI model, then we are taking the financial consequences. So we are really betting that the AI model will perform up to the standards. And of course, there's a risk that it does not. And that's nice, because as a big insurance and reinsurance company, we are used to dealing with risk. And I completely agree with you. You can have the best data science process, but by the nature of, say, let's take machine learning. By the nature of machine learning, the machine learning model is generalizing on the training data. This means basically sacrificing on certain, let's call it outliers or subsamples in it. And of course, there's then an error. And this, so you have the sampling part, but then also, of course, you have the whole data drift topic there. So by nature, there's a probability that the AI might not perform well or might basically fail. What we say is, basically, we are happy to take this AI prediction risk for this bias. So that's the economic value of the AI failure, what we attribute to it. And if then the AI model is basically still economically viable in the market, then it should be used. And then we are basically taking this risk. Of course, an AI user could also take the single risk. I think the beauty is via the performance guarantees that you're pooling all the risks on the AI provider's side. Of course, you have then also basically the law of large number game in a certain way there as well. So it becomes much more manageable, this kind of risk. Now to the second part of your question in terms of suicidal trust. Well, I mean, if we take this risk, then we believe that the AI will be fit for purpose relative to the honest statement they are giving under the performance guarantee. And in case it fails, we are basically covering the financial costs which actors of the society might occur by trusting on the AI system. In a certain way, this, especially with the insurance backing of the performance guarantees, when there's an enforcement of honesty of what the model can truly achieve, depending on what is really important for the user of the AI model. I hope this helps.
Yeah, that